It's time to mind your business with me, Jamila Lodge. Tune in to find out how to mind your business with BEDC, special guest entrepreneurs, industry experts, and more. Brought to you by BEDC. Bermuda Business starts here. How are you?
I'm good, thank you. Always great to be back in Bermuda.
Yes, welcome back to Bermuda and welcome to the Mind Your Business podcast. So let's get started. Let's introduce yourself to the audience, who you are, and what are we going to talk about today?
Sure, I'm slightly husky this morning, apologise.
No worries.
Simon Glass, I'm the founder effectively of Qodeo. We're a business that matches investors with diverse entrepreneurs globally.
Okay, all right. Can you tell us a little bit more about Qodeo and how you got started with it?
So thanks, yeah. So I used to work in venture and entrepreneurship and in banking and other kind of roles. And I always found it hard to know who to go and speak to from an entrepreneur's perspective with venture capital firms. And even as a venture capitalist, found it hard to identify who to speak to from the entrepreneur's side, which is something people don't always think about. So originally built sort of a database up on the side of venture capital firms trying to help with that. And then spoke to entrepreneurs and investors, and what they really said they wanted was, rather than just data, was something almost like a matching, like almost like a dating site, effectively, try to identify who to speak to.
Right.
So that's how we got started.
Okay, awesome. So let's bring it really back to basics. Let's explain venture capital, entrepreneurs, what is that? Why is it important?
Sure. Well, I mean, entrepreneurship is important to me because that's what I do in one way or another, and it's about how we grow economies and grow jobs. And most entrepreneurs hopefully like what they're doing. Not everybody's always successful, but it's a career path. And why it's all important is, and why it's all relevant, is that investors, venture capital firms, private equity firms, others that people might have heard of before, angels, family and friends, help fund some of these businesses that actually have to get going. It always takes money to make money.
Yeah.
So that's why it's important, flywheel.
What made you get into this? Were you always in this industry? Did you see a gap that needed to be filled?
Yeah, I mean, I worked in a couple of venture capital firms, and one of the roles I had was looking at raising money. Another thing I looked at was also how to deploy the money.
Gotcha.
And it was very hard for us in Cambridge in the UK in particular, and it was very hard for us to define who we were and be able to identify who to go and speak to as a venture firm looking in the entrepreneurial community. The problem with venture is people tend to do business with who they know. It's like lots of other things, and that misses the great vast opportunity space out there. And as an entrepreneur, and also advising entrepreneurs in various different roles over the years, working with them, not just at early stage, but also later to mid-market businesses as well, try and access equity funding of some sort. People didn't know really where to start or go. Exactly. And so there was a kind of frustration there, and so that's where kind of the idea came from.
Okay. So how exactly does Qodeo work? Is it an app? Is it a website? How do people get onto it?
So we have launched an app, in a sort of beta app, but actually, interesting enough, unlike in the pandemic, everyone's gone back to desktops. We're seeing like 96% of people using desktop rather than apps anymore, which is kind of interesting. But it's what's called web application. It's a website. So entrepreneurs or venture capitalists, either side, the investors on the one side or the entrepreneurs on the other side, can basically build a profile very quickly on the system.
Right.
They onboard, there's a kind of a sign-up page and process. And once they give us some details, it starts already crunching information and displaying who they should try and talk to.
Okay, so if I'm an entrepreneur, I sign up and I'm interested in getting some funding, I make myself a profile, and then what? Do I automatically get matched? How does that work?
So it's interesting. So a lot of the matching is around identification. Okay. So we don't actually, as a platform yet, do the deals. There are crowdfunders out there, or there are other kind of groups or advisors, accountants, people like that who actually do deals.
Right.
We try and identify who the menu will be of who you should try and identify to start your process with. But as soon as you build a profile, it's the algorithms and the data in our system start assessing who the best matches are on the system for you, and will display those automatically. You do have to put some information in.
Yeah.
The better the information, the better the match.
Right.
And the same on both sides. Data isn't always perfect.
Yes.
And then it starts working. And it does depend a bit upon where you are, what sector you're in.
Okay.
And also how much you're raising, what size your business is at. So sometimes we find some entrepreneurs it's a bit early for or a bit late for, depending on what stage of business they're at.
Okay.
Or there might be some other kind of tools they need to work with as well. So we have a service called Concierge.
Uh-huh.
So BDC as a partner works with us. So when we onboard Bermuda entrepreneurs who are part of BDC's programs,
Yeah.
you guys will give out some free passes. We're usually very low cost, like 10 or 20 bucks a month for entrepreneurs on Qodeo, or 99 bucks a year. But there's a special program with BDC to help Bermuda entrepreneurs, which you guys can obviously share the details of. But what we do for those concierge subscribers is a bit of extra stuff. So we have some events sometimes, and we also do workshops.
Awesome.
And some workshops around how to onboard on the platform. So although we think it's fairly intuitive, it's always helpful to show people what people are thinking about on the other side, because the venture capitalists, the investors, see so many profiles that in a standardized dashboard kind of way, you want to, on the one hand, stand out, but the other hand also not be out of pattern. And there's a kind of bit of a balance there. So we can show and describe and discuss tactics there. So we're increasingly in our platform trying to actually add some extra advice around that. And then there's a number of things like the workshop we're doing with BDC, which is around some tips around what to think about. So as you build your profile, think about what the people on the other side are thinking about as they review your profile.
Yeah, and I was just going to ask you about that too, because I think our listening audience, you think profile matching, they might just think like Tinder or things like that. So it's like dating for funding and things like that. But I think a profile for this has to be a lot more in depth, right? So what are some things that people should be prepared to include in their profile? Is it a business plan? What is it?
So there are a lot of analogies with dating.
Yes.
And we've got on our logo on our website, we use two frogs, the frog analogy of dating. It's a lot like dating. I mean, I gave an example this morning on the radio this morning here in Bermuda, and we talked about, dating is like, hopefully people meet when they're both available kind of stuff.
Yep.
And the similarity there is that a venture capital firm has to have money available to deploy at the time, or investor has to have money to deploy at the time you're having that conversation with them to do a deal. So entrepreneurs aren't always aware of that, and it's they automatically think it's like a money tree. That give me the money. For entrepreneurs, and it's not like that, and that's very similar to in dating. Some people come on or off the market. They're not available anymore. So they're not swiping or something. It's actually we're not swipe. It's kind of similar. Again, like on dating, if you have a good photograph on dating profiles, not that I use them these days. But if you've got a good photograph, you've got a good profile that attracts people, it's very similar in the online world in business, like on Qodeo. So it's important you put your best foot forward. And there's a bit of a balance to be had between being realistic and yet having aspirations. And so things like putting information about financial information, about your team, about your business. Something like the business plan is kind of a later stage almost. It's like people, what the algorithms look at is pick up lots of information that is relevant to how venture capitalists might initially sift that information to make those initial decisions to look at your business. And that's the most important stuff to put forward. So, and explain what you do. We've seen entrepreneurs, not put a website down when they have a website on their profile. It's pretty normal to have a social media profile or a website for any business these days. And if you don't, that looks unusual, and that kind of could put an investor off. So even if you're a good match, they might think that's a bit funny.
Because maybe they're not ready yet and things like that.
Maybe not ready, or maybe there's they want to look at you very quickly. And so if they're doing some analysis quickly on what they see from us, there are various social media handles and profiles, because we suck up the information to the profiles in the system as well. Then if that's not there, it's just something they can't see, and they may either expect it for certain. Like if you're a consumer type business, like in Bermuda, there are lots of retail businesses or hairdressing businesses, or not for me, but not today. But it's, kind of commercial, what we call B2C, business to consumer type businesses. Then it'd be odd not to have an Instagram or a kind of Facebook kind of page, that kind of stuff. Whereas if you're a business person, it'd be normal to have a LinkedIn page. So things that are missing sometimes send the wrong signals. And then also information just about, and BDC can help entrepreneurs here about how to kind of think about things like how to present financial information. And nothing is nothing's bad. It's just a matter of it's different horses for courses and how it's presented.
Well, that's good to know. I think people who are interested should definitely be prepared and to put their best foot forward, like you said. So you mentioned that we're doing workshops with you. So we do have one, Unlocking Fundraising Secrets. Can you tell us a little bit about that workshop?
Thanks. So we're doing a few workshops with you folks, and we're going to try to work as workshops rather than just presentations. because that kind of engages a bit better. But I will present some stuff. What we're talking about is, first of all, what kinds of finance are out there.
Yeah.
Because Qodeo sits within the equity part of finance. So there's debt funding, which is banks and that kind of stuff. So we'll talk a bit about what that is. We don't cover that so much as a platform, but it's important you understand how that sits and fits in the funding matrix.
Yeah.
Then we talk about equity and what kinds of equity there are, and what the pitfalls are and benefits.
Yeah.
So one of the classic things is people are always concerned about, if you get an investor on board, they'll take part of your business, and that gives away control and ownership.
Right.
But then you have to get the right investor, which is one of the things we talk about, because it's all very well and good getting the cash, but there's smart money versus dumb money, as we call it. So, and also there's the right fit. So just because some investors are so well known, they may not be able to help you or in the right kind of way, or they may even detract from your business. So we're going to talk a bit about that, and really much more about the kind of identification process, because actually we shorten, our platform Qodeo shortens the time to market to actually identify who to go and speak to in the venture space, and that's a huge time waster for we found for entrepreneurs, as it's for investors on the other side, to try and identify those opportunities, so we can help filter those inbound opportunities for the investors as well.
Right.
But it's really important to identify who to go and speak to, and then how to go and present yourself before you can get to go and present yourself. So we're going to probably talk through a number of aspects about identification, how to be ready. So you're not like deer in headlights when somebody comes along and actually wants to cut a check, and you're not kind of aware of really how to proceed from that point. Or you do the wrong deal with the wrong people.
It's want to avoid that at all costs.
There are lots of stories there. I mean, in most business histories, there's somebody doesn't kind of fit somewhere, or somebody misunderstands something, or somebody's expectations are wrong. And there are also some, I think, for BDC communities here, there are some particular aspects in terms of diverse entrepreneurs to think about. And generally, in the venture community at the moment, there are only 2% of venture-funded entrepreneurs globally are black. Only 8% of women people in venture are women. So you get small minorities representing certain kind of groups looking at these plans and opportunities. So how do you think about how to navigate through that? And what challenges are there around that? So we'll talk a bit about that, and then also there are issues about being remote. So I know some investors, lots of money in Bermuda. It's hard to find. And I know there are some great opportunities here. There's yourselves, there's Ignite, there's others here on the island who help entrepreneurs. But there's also other opportunities elsewhere, and how do you then connect into that broader world and not lose those connections here? So we'll talk a bit about the challenges of remoteness, or what we call regional entrepreneurship, which is a real focus that we have, because platforms can really help entrepreneurs connect, or just you want to go and look at deal flow or opportunities. I'm going to New York to go and talk to investors. Miami is now a big hot place for investors from here. If you're going to get a step on a plane and go meet people, who should you go and speak to? Who do you not want to forget? It's that kind of check.
And from a BDC perspective, it's really we want to make those connections easier, and we run into entrepreneurs that are interested in looking for funds and are ready for funds, but then they're just so afraid of making the wrong deal, like you said. So these workshops that we put on with you and our partnership with you really do help the entrepreneurs bridge that gap, information gap, and things like that, and then using Qodeo as well to match with different entrepreneurs. It's just a great opportunity, I think.
I think so. I mean, it's, in a way, almost using us. I mean, it's great to build a profile on us. I think what we'll do probably is put a workshop together to onboard a bunch of entrepreneurs in one go, so we kind of walk them through those processes rather than individually. We can do some individual follow-up possibly, but so will help people begin to understand that process. But before you even get there, or even if you build a profile before you're ready to speak to investors, you can go into like a stealth mode if you want to, where you can actually, on our system, you can decide not to be visible, or you can be visible, just like, just wait to see because venture or investor types can reach out to you. And that actually is more the process, and what we encourage in a way more than entrepreneurs bombarding the venture firms, because they tend to get bombarded.
Right.
And we'd also look at things like, if it isn't for you, or if it could be for you later.
Right.
Because in many cases, there are businesses that will not be venture fundable. Investors like angels, venture capital firms, private equity firms, looking to have a business where they can grow that business to a certain scale and then sell, what they call exit that business. So even by explaining what we're doing, it may be educational for people here, but may not even be relevant immediately.
Right, exactly.
Or may not be relevant in the current role, but it might be helpful for some other kind of position. because obviously the market here is very small,
Right.
and so in many cases it will look very small for some of those kind of businesses. So how can you explain those aspirations and bridge those? But that's in a sense also not a bad thing. We found actually on our platform that a lot of entrepreneurs, it's almost like a frustration. Entrepreneurs they expect automatically for the money to appear. And we don't do the deals on the platform. We identify who to go and speak to, but that's part of a series of process to get money.
Okay.
And to get the money in the end is after multiple meetings, after multiple reach outs and multiple filtering and all the rest of it. So there's a whole series of process. Many entrepreneurs don't have the time for that.
Right.
They actually want to run their business rather than spend time with investors, even if we can shorten some of that process for them. And for some people, they'll find that it's not right for them now or may never be right for them. That, even in a sense, is a value add by things we can do with them, because we can explain, actually, this is something to think about.
Right.
If you come across this or somebody reaches out to you, be ready for it.
Right.
But it may not be your thing. And that's not a bad result.
Yeah.
And even those who are applicable to venture funding don't always get it. There are downturns when people don't get funded who should get funded.
Okay.
There are people who don't know the right people. There's all kind of like issues around how people do and don't get money.
Yeah.
And even venture capitalists make mistakes lots of times. So for all the supposed success stories of making investment, there's far too much focus, we think, on people shouting about when they've raised money, which is different to actually running a successful business. And 8 out of 10 or even 9 out of 10 venture-backed businesces go bust or don't go anywhere.
Okay.
So
I didn't know that.
even after all those negotiations, all those filters,
Right.
not everything is a success story. Even that process. And that can be quite a painful process too, when people have a bunch of investors, how they deal with them if there's not success. There's actually an article I was reading yesterday about that. What do you do if you don't grow your business as aggressively as the venture firms want you to?
Right.
How do you deal with these people? You've now got stakeholders you didn't have before. So it's a complicated game. So I think it's a matter of partly an education piece to understand if you go down that path, A, you need to do the identification process. B, you need to think about a series of pitfalls. And C, just bear in mind this broader story.
Yeah.
It's not all roses.
Right.
It's a transactional kind of relationship you can have with these people. So we try and help people with that.
Good. What are some common fundraising myths that you come across with entrepreneurs?
So thanks. So that's what we talk about in some of these workshops too.
Yeah.
So people tend to go after venture firms or investors who invest in businesses like their own.
Okay.
And that's often the opposite. So how we've built our system, we've got algorithms and data. We built an AI that runs our systems.
Right.
And a lot of that is anti-intuitives. So people think, that investor backed a business like mine, so they'll back mine. Because it seems obvious. I mean, often investors are in certain sectors or stages of businesses.
Right.
They back certain kinds of businesses. And if you see, they back something like mine, like let's say it's a food delivery business, and you've got a food delivery business.
Yeah.
But then the investor might say, well, I've already backed a food delivery business. I can't back more than one of that exact type of business.
Okay.
So even on a sectoral base, if it looks similar, or even specifically if it looks similar, they may not back competitors. It's quite rare to back competitor businesses because there may be conflicts, things occur. And in fact, if you start talking to that investor, you might be giving too much away about your business to somebody who might be backing your competitor. So that, and another one is people tend to think that every investor, whilst they want a sale, as I mentioned before, an exit is called, because that's what you've got to do to realise the return for the investor in the end. But they think everything has to be a unicorn or a decacorn. It's massive business as a result. And we found that's not the case. You need to have aspirations. You need to want to grow a business.
Right.
But maybe not grow. Obviously you can grow exponentially. It's fantastic. But we found in Boston, for instance, where we're quite active, where Boston University is one of our research partners.
Okay.
It's a market a lot of people from Bermuda access in various ways,
Yes.
but Boston from here, easy to get to and stuff. That venture capital firms there were very happy with a kind of medium-sized return.
Okay.
So if they end up selling a business for $200 or $300 million, which is obviously a lot of money, they got into their, let's say, $20 million valuation originally, they'd be perfectly happy. And we had a phrase there, searching for horses, not unicorns, that came up in one of the interviews with venture firms there, which is not like Silicon Valley, where they expect you to be $1 billion or $10 billion.
Exactly, yes.
We even for our own business, we're backed by various backers. And we spoke to a venture capital firm in New York, and we hope to be a pretty sizable business in the medium term. But even this top 10 firm said to us, we think you could be much bigger than you actually think you could be, but you need to also prove to us
that
through
you
your
can.
model and all the rest of it, through your research, that you could be that scale.
Right.
And that's kind of like we thought, okay, so we went back and looked at our numbers and all the rest of it, and you think, oh, it's a bit, particularly in a British mentality. I know Bermuda's like a hybrid between Britain, Caribbean, America. And people here are probably a bit more British in a sense, a bit more reserved than let's say Americans might be. And so I'm obviously from the UK, but I live in the US now. But it's kind of like we're hybrid as a team where we are, and people tend to often be a bit reserved about their aspirations. And we Brits, we thought, oh, this guy's, what's he smoking? How do we prove this? It's kind of, is this really real? Because we're here now, and they want us to be up there,
right?
And we have to do all these steps to get up there. But what they're saying is, because we wish to back business that potentially could be up there, if you're not going to be up there, you're not ours.
Right.
You might be somebody else's.
Right.
But in fact, they said, well, you can be up there, but you need to relook at how you are to be up there.
Right.
And maybe look at your pricing or your markets or whatever it might be to be up there.
Yeah.
So it's a bit more of a complicated journey than just sort of one might think. But so the scale of aspiration also affects which investors you might want to look at.
Okay.
Because do you want to go for people who are going to expect to be up there because there aren't that many up there, but when they write a check, they're also incredibly demanding, but they put a big check in. You might want smaller checks, people with slightly smaller aspirations, because for you to exit for quite a few million might be a very nice return. You're not necessarily looking to be the next Mark Zuckerberg or something, because there aren't that many of them around. So it's a matter of kind of like scaling and kind of like, being realistic.
Right.
There's a dating analogy there as well.
Yeah, there definitely
and you usually end up with the right match in the end, but it's kind of like we're just trying to help people on the journey of getting to that match a bit more easily, I suppose.
Yeah. So. I mean, at BDC, we deal with a lot of small, micro, small, and medium-sized businesses. When would you suggest people start thinking about funding? What's the right time to do that?
I think it's always probably sensible to think about funding in the kind of cash flow business. You always need buffers. You may want to, if you're looking to grow a business.
Yeah.
So there's several things that tend to happen. People want to either grow a business, or they're in a sector that naturally expects that growth. Or even like a lot of family businesses. I know in Bermuda, a lot of family businesses here.
There are.
And there's what's called succession. So sometimes, I know Bermuda, a lot of people unfortunately leave. I mean, I kind of get why people leave a small place somewhere, but it's such a great place. So kind of crazy leaving away. But they may come back later, but they may go off to other aspirations and other careers and things, and then leave an existing family business behind. And then the family goes, well, what do we do with this?
Right.
Do we sell this? What do we do? And one of the options, instead of selling, you can just sell a business, obviously, but maybe somebody wants to come into your business and grow that business. And so that kind of succession change is often a time when people think about that.
Right.
And there's some quite interesting areas there to think about, and that sometime before that happens, so that at the time that happens, that engagement's ready. To talk to investors, I met somebody last year, actually an investor, in a conference in Thailand. We were at this biggest tech and AI conference in Southeast Asia last year with the British government, actually. There was a British government trade mission to Thailand in August last year. And I met this investor, like a VC. He's what's called a solo LP, a solo VC, they call it a solo VC. Like he's a one-man band. Most venture capital firms tend to be a few people or more.
Right.
He's a solo VC, which is quite unusual. And he had to raise his own money, because they have to raise their own money as well to invest into this business, like a chain. And he said he got turned down 60 times by one particular backer he got in the end, that he got after 60 attempts, but you have to do 60 attempts. And he explained that was also, which is extraordinary, and that's about persistence. One of the things we talk about also in his workshops, about when to take no, when not to take no type of thing. And I'm a person who doesn't easily take no's, but my wife will tell you that. But it's kind of like he was explaining that it was a number of things. It was both the persistence, but also get people to take meetings. So when you want to get an investor on board, including actually even more so like an angel investor. So if you're starting out your business, the first step here in Bermuda is to get one or two angel backers, and there are some angel networks here and stuff that you guys and Ignite and others here help with.
Yeah.
Even if you get those folks, they're very unlikely to write you a check immediately. They want to get to know you.
Build a relationship.
They want to get to know you. So one of the other things that we talk about in these workshops is about the importance of team and people. So people, I think the first myth second myth we talk about in this myth busting workshop is about, you think venture capitalist investors are just interested in money, which they are, and therefore they just look at the money metrics in a plan.
Yeah.
The earlier you go into business, but it's relevant to all size business. I used to work in banking. It was actually as important in banking in some ways. It's not just the financials. Obviously, they're the picture of the business, effectively.
Yeah.
But it's the people. And you need to build relationships
Right.
with people. And so unless you've known somebody for a long time, you often will have to take 4, 5, 6 meetings. And during the pandemic, it changed a bit. I was living here during the pandemic. It was a different world then, when everything's online.
Yes.
Now it's like a hybrid. And now the venture industry and investment has gone back to being a bit sort of local to global. So it's not quite what it was pre-2020. So now you found a lot of investors want to invest locally, but some will invest more globally. And obviously, and I saw something actually the other day about Silicon Valley, and they were saying, look, it's gone back to Silicon Valley that you have to be there to get the money from people over there, or persuade you're going to be there. And if you tell them you're going to be there but you're not there, they don't quite get it. They expect you to be there. Why not? There's no tolerance. It may be unrealistic, but they don't get it. It's like you've got to be there to be in the game. Other people not so much. But even there, if you go and meet with them, you're going to do some Zoom meetings. You're going to do in-person meetings. You're going to meet with different people across a firm.
Right.
And even if it's an individual investor, you may need to meet 5 or 6 times.
Yeah, or 60.
He was turned down 60 times before we got even in the door. So it's going to be emails, it's going to be phone calls, it's going to be direct mail, chat, all kind of stuff. There's
so it's a
ways
process.
of working. Yeah, and I think one of the things that the entrepreneurs need to understand is and I've had to understand myself as well, is that it doesn't, it's not always, you don't always get an immediate return. It's not an instant gratification game. It's an empathy game. It's you got to read the room. You got to build that relationship. So, I remember going to Mumbai once for the business and in India, and because we work in India, and I was there in January. It's a fascinating place. Incredible venture market now, incredibly entrepreneurial. Yeah. And the venture capitalist said to me and one of my colleagues, they said, "Who backed you when you first started? Where you came from?" And we thought, that's a weird question. kind of, where's that coming from? And the guy said, well, and this is really relevant to people here in Bermuda, is he said, the reason I asked the question, it was, we then explained, and when we first started the business out, we had various backers where we first started out. And it's a bit of a difficult one, because if you have difficulty raising money where you come from, then you have to go. If you have to find it elsewhere, there are yet more hurdles in your way, which make that conversation more difficult as well. But this guy said is, it's very important, and it's probably local things important here, to get somebody at least to back you from your local community. And the reason for that is that they know you. Right. So if you go, if you're in New York and you're raising money with venture capital firms, you may or may not know these people. You may know them indirectly, but you may be referred to them, found them in various ways. But if you have somebody who backs you in the very early days locally, swings and roundabouts, right? Because if it misfires, it can be a problem in a small community when things go wrong. People have to understand what the options if it does go wrong. Right. But if they back you locally, it means they know you. They can eyeball you. They've got a relationship.
You have a reference.
Yeah, and but it's like a sounding board. It's a comfort thing for the investor to know that somebody in your home environment where you come from knew you're a good person and trying your hardest and whatever it might be and backed you. Difficulty is you've got to find that person, and it's got to be the right kind of person, because sometimes people with the wrong kind of people may back you. But that's also quite an important thing I think to try and do.
So, in what ways does Qodeo support diverse and regional entrepreneurs who typically have less access to venture capital?
That's a great question. So we zeroed in this quite early, actually, well before a lot of the buzzwords. I got a sort of geography background, actually, geography university, and I've always travelled and stuff. And our cornerstone backer, this guy Sahavi McGrath, who was chairman of Prudential and also the Man Group big hedge fund. Prudential, folks over here, is an insurance company, and Man Group's big hedge fund. He also did geography, and we got talking about this. And he's from Northern Ireland originally, which is a regional community in the UK. And we got talking about the regional entrepreneurship and. Regional and diverse entrepreneurs who both, and they can be the two together, but both face the problem they don't know people. Mm-hmm. Now, the venture firms historically, and a lot of investors historically, do business with who they know. Right. And one thing we have to continue to do as a business is ensure that we disabuse those venture capital firms of that view. So it's not saying you shouldn't do business with who you know, because often if you're on a university campus, there's some genius who comes out of the campus, that makes sense, cool.
Right.
I worked in Cambridge in venture, and we dealt with lots of entrepreneurs on the campus, and we found people there, and that was what we did. And it was our community. But there's actually research from Harvard Business School and others showing that you get too much groupthink if, as an investor, you back everybody like you,
Right.
and you miss out on opportunities. You miss out on opportunities as an investor if the opportunity is lower priced, because in many cases valuations, the value of these businesses from regional locations are lower value than in big frothy locations.
Okay.
So venture capital firms actually get more uplift by getting in earlier. And often there are reasons why entrepreneurs come from other locations, or there may be entrepreneurs who just happen to come from other places randomly who've got this great idea. It's a bit like in running, like Flora here, happened to come from Bermuda, but it was world beater.
Yes.
It's kind of you get reasons why there's insurtech here and that kind of stuff because insurance business here. But there's random entrepreneurship exists, and those venture capital firms miss out on that. So we've kind of tried to design the system in a number of ways so that it actually gets around some of that stuff, and also understands some of the nuances. So we know that investors, some investors will only try to work with those who've been backed before, but how could you have been backed before if you're from a regional diverse background, you haven't had that kind of interaction? So, so we tried to push some of those opportunities forward. We've just been testing and rolling out called diversity fields, and diversity fields using AI. The CTO put together, chief technology guy put together, where it effectively doesn't downscore other entrepreneurs, but fast tracks entrepreneurs' diverse backgrounds toward the kind of investors who might be open to being reached out to them. So there are now obviously women's funds, black entrepreneur, black VC funds, etc., focused on just that. But there are a lot of entrepreneurs, a lot of VCs and investors who actually understand they need to be broader in what they look at. So that those fields, and we're tweaking them all the time, but getting feedback on them all the time, but we're working on some of those things. And there are other things like, so aside from the algorithms and the way the data is collected and how the system itself works and trying to put forward opportunities, it's low cost. Obviously, there's deals here with BDC so that certain entrepreneurs can get free access on your programs, so that's lower cost. So making something low cost, making something online, makes it a lot more easy to access as well. And whilst we're not an events organisation, we do events like these workshops, and we're doing actually a couple other events we're going to announce a bit later in the year, one in the UK, one in the US, and at least, where we bring together diverse entrepreneurs and investors, and those who've had a bit of a focus around that, and showing what the success stories potentially in those industries can be, and how opportunities are being missed. So it's almost, I think, part of it is in the communications. We try to put out information and do workshops and feedback sessions with entrepreneurs, trying to point out some of these things. Even our concierge product, which will be automated medium term, but currently is not through AI, etc., but is currently done manually by our team. So we talk to entrepreneurs about their profiles sometimes on the concierge tier. We can identify, we see certain traits or trends occurring that certain entrepreneurs just from certain backgrounds are just missing out on. If you don't go to business school and you're not in this particular location, you may not be savvy with certain things. We've changed language on the system. There's more we have to do on this. There's a lot more we have to do on this. There's always more challenges. But we've changed language around some things. So we found if you use the word on sales or revenue on one of the things to fill in on one of those boxes in the system, about sales, we used to have zero or no revenue, no sales, or certain sales. We changed a bit the language around that to explain pre-revenue and things like that, because some businesses don't have revenue, don't have sales yet, but because they won't. Some don't have sales for a long time, for various reasons. Like biotech businesses tend not to have sales forever until they get sold before they even have sales sometimes. So. But some of the language around that was potentially putting off entrepreneurs. So entrepreneurs who hadn't had the kind of the business school background or something, that kind of savvy, that kind of knowledge, either didn't know how to respond to those questions, therefore didn't respond, therefore information wasn't in the system, therefore it couldn't match them, therefore some issues were going on there, or we found things like certain language was off-putting, we had to do more. So I think one of our missions the next year or two in our business is going to be doing a lot more education and continuously improving our system. There's a long way to go, obviously. There's always improvements you can make it. The system's up and running, but it's like we get a lot of feedback and try and design it increasing. So in the next year, one of the things we're hoping to see is we're actually going to reinvent the way our system even works, so that the way you're on board is going to be changed radically, and that AI allows some of that stuff to happen, so that it's kind of a bit, again, anti-intuitive, the less the entrepreneur has to know or understand, the easier or the better it should be, the more seamless the process should be, and yet they should know some smarts. There's kind of a balance to be had there. You shouldn't have to learn the business of venture to do business with venture.
Exactly. Yes.
Because you should be doing your business,
right?
Running your business. You need to understand enough, but so we're trying to make the journey easier and simpler and that kind of stuff. And we've got a long way to go in our business to achieve what we'll achieve there, but we're trying to help entrepreneurs on that journey.
Exactly. So how does your platform compare to other fundraising tools that are available for entrepreneurs?
Getting a question. I get asked this quite a lot by shareholders, by investors, by people in the marketplace. So there are different kinds of players selling various services, I suppose, to entrepreneurs and investors. The classic one is sort of angel platforms. So there's a few angel platforms around where basically what business angels are is very early stage individual people who invest in very new businesses, effectively. Right. That's before you get onto the venture community. Okay. So we don't directly service those kind of groups. We're looking at how we onboard them more seamlessly and work with those kind of groups better. And we'll have some offerings later. So there are platforms around that, and they are often a bit more transactional. There's different kind of models there, but they are trying to pair up very early investors or very small investors, individual investors, rather than so much groups of investors or larger ticket sizes. Yeah. So these are small ticket prices. So we're not so much in that kind of space. There's a lot of crowdfunding around these days. It's obviously been hugely popular. Yeah. Crowdfunding is, again, a different animal. Crowdfunding is actually transactional, so they usually do the deals. Tends to be regulated because they do the deals and therefore only operating in certain locations, whereas we're much more global in how we operate. Okay. And they're taking a commission off what they raise for you. Right. There's attraction to that because obviously, if they raise money, and they take commission, it's great. But there can be quite a lot of small fees, and there's a lot of costs often sometimes that are a bit hidden in working with those groups. And they tend to work with groups of small investors, those angels, those early stage investors, and be best really for things like consumer businesses. They don't tend to suit a lot of other kind of businesses. So if you're in a consumer early stage business, that could be a good way to go. That can be complementary to what we do, but that's again a different model because they take a commission, which we don't. We don't just flat rate at this stage. We may medium term take commissions, but we're flat rate. Yeah. So it's very simple pricing with us. So there's a few kind of things you have to look out for crowdfunding, and it suits certain kind of businesses. We're much broader in how we operate. And then there are a lot of data plays out there, and there's people who use sometimes some relatively similar language to us, but actually doing something quite different. So there are a lot of products out there. We had an entrepreneur, actually a great black entrepreneur in Toronto who signed up the other week. We did one of these concierge calls with, and she saw one of these things online. Said, it looked a bit similar to you. I tried it. She went online. She didn't understand what it was talking about. So, we're not perfect. We're constantly trying to demystify that language, which we've got work to do on. But she found that was simply selling her data. So she said that actually when she looked at the product, and that's how most of these things work. So most of the data provision out there in the industry is expecting you to have a high knowledge of what you're dealing with, and is not matching. It's basically saying, well, we've got a database, like a directory of more directory-ish. Yeah. We do have some directory capability in our system, but we try not to focus people on that. Yeah. So they would say, we got X thousand venture firms covered, and they have all this historic information on them. But the historic information isn't always accurate because people in the venture community tend to share the good stories, not the bad stories, and the bad stories. So, or things don't work out. So you don't to get a bit skewed with what you see. Okay. And it's historic as opposed to saying what they're doing next. Right. And it tends, as I said before, about this thing about just they back someone like me, therefore they should back me kind of thing. Right. It tends to skew people to think that way. So most of the data plays are actually quite poorly suited in terms of the jargon, in terms of the applicability to the needs of an entrepreneur trying to raise money. The other thing is what's the price. So she said, and it's true, that then she had a call from one of these firms, and they were trying to charge her thousands of dollars to use it, and she as an entrepreneur didn't have that money to do it, and she didn't know what she was doing in the first place, so she gave up. So the data plays out there tend to be much more institutionally focused, much more big companies to use, and much more about aggregating large amounts of data. We think data is important because we use it in our system, we're much more interested in how the business is done than just historic data, and we're much more interested in trying to put parties together. I mean, like on dating, we don't do the transactions like crowdfunding, but it's like dating apps. Dating apps put you together. You have to then speed date or whatever you do.
You've got to do the work.
You go
after.
offline to go and do. Go off with your partner, and it's relatively similar to that. But so we're definitely positioned to just being a list type process, or trying to have to navigate a list. We're saying we curate the list effectively, trying to help you on your way for that journey.
Awesome. So we are at BDC super excited about the opportunities that you provide to entrepreneurs, Qodeo, and then also working with you on various workshops for some of our incubator programs and things like that. So we definitely are really excited about that. And we are at the bottom of the hour, so we just want to wrap up. Is there anything else that you want to leave with our listening audience? Any future Qodeo advancements you want to talk about?
Well, have a look at our website. It's Qodeo.com. So it's Qodeo is like rodeo.
Okay.
So
That's a good analogy.
It's Qodeo. There's no U's or anything, so we made up the name. So it's Qodeo.com. And if you go there, there's actually a really useful blog page.
Okay.
And the blog page has several pages of it, have all kind of hints and tips for entrepreneurs there, which is useful anyway. There's sometimes some recordings of various events, stuff we've done. There's a great interview we did the other week actually with our CMO, Melissa did, our Chief Marketing Officer did, with a guy called David Siegel.
Okay.
David's an incredible entrepreneur in New York who was the CEO of Meetup.
Okay.
Which is it's a bit like Eventbrite, so it's a big meeting up kind of site. It was bought by WeWork.
Oh, perfect.
So he's written a book about that whole experience. Then they came out of WeWork because WeWork fell apart. But he's had incredible experiences. We did an interview with him about some tips for entrepreneurs. Okay. That's one of the new articles there. We are going to be we do other events. Some of them are hybrid, some are in person.
Okay.
We're going to be doing other work with yourselves at BDC. So keep an eye on what BDC is doing, obviously. And just keep an eye on what we're doing. And obviously sign up to the platform. It is free for a week before you actually have to pay $10 or $20 a month normally. There are some promotions sometimes. But obviously, if you work with BDC and you're among the cohorts, then there are programs on board with for free.
Yes.
So we'd love you to take advantage of that as well, and just go do it. I suppose. I mean, from an entrepreneur's perspective, you always have to get out there and try.
Okay. So. Well, thank you for joining us on Mind Your Business. We're happy to have you, and wish you all the best.
Love working, you guys. So
yes.
Thanks.
Thanks for tuning in to Mind Your Business with me, your host, Jamila Lodge. Tune in next week, Thursday at 4 p.m. because if you don't mind your business, who will? Mind Your Business is brought to you by BEDC. Bermuda Business starts here.